1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
As the coronavirus outbreak continues to spread,
New York very much the epicenter.
Look to Bloomberg 1130 to keep you on top of the news.
Governor Andrew Cuomo giving us some of the latest.
How will it affect you, and how will it affect the local economy?
We've taken every action that government can take.
For the latest updates from in and around the tri-state area,
President Donald Trump says National Guard will help in New York.
Stay with Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com. The market's in focus every business day. The P&L Podcast with Paul Sweeney and Lisa Abramowitz.
Are there some sectors that you want to have more or less exposure to?
What's behind this engine of gains?
Analysis of the day's Wall Street action.
The U.S. market looks relatively safe.
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
Ward McCarthy joins us right now.
P&L with Paul Sweeney and Lisa Abramowitz. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE SIPC.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
Good morning from London. I'm Sandra Kilhoff with this Bloomberg Business Flash. Now, we're about 47 minutes into the European trading day, and we are seeing stocks moving lower. The Stoxx 600 currently down 2.2%. The FTSE down 2.4% here in London. The DAX down 1.7% in Frankfurt. It comes as the global death toll from the coronavirus exceeds 34,000. We're also seeing U.S. equity futures pointing to a lower open there. Over in the currency markets, this is translating into the dollar being fairly big today, snapping its 4-day slide. The Bloomberg Dollar Spot Index now up 0.7%. The yen, meanwhile, lower, down 0.2% at 108.2. We're seeing sterling sliding more than 1%. This after Fitch downgraded its sovereign rating on Friday. We also saw a cut to the Mexican rating come from S&P. That's bringing the Mexican peso lower, currently down 2% at the moment. We're also seeing the offshore yuan a bit weaker after the PBOC lowered its short-term funding rates this morning. So quite a bit of movement there in the currency markets. In the bond markets, 10-year Treasury yields are now down 3 basis points at 64 basis points. 10-year bond yields sliding 6 basis points to negative 53. 10-year gilt yields currently at 31 basis points. Over in commodity markets, WTI did briefly slip below $20 a barrel earlier this morning, now down 5.8% at $20.26 a barrel. That's a Bloomberg Business Flash. Now here's Leanne Garens with more on what's going on around the world.
Sandra, thank you. Italy has reported a second straight daily decline in the number of deaths from coronavirus. This offers hope that the stern measures the government has implemented over the last 3 weeks to combat the outbreak may finally be working. Fatalities from the disease fell to 756 on Sunday. New infections in the last 24 hours totaled 5,217. The biggest holiday location in Thailand is now going into lockdown from today, with all transport transport links banned except by air. Phuket will be under tighter restrictions for at least a month, with only trucks and ships carrying essential goods and services exempt from the order. Health officials in Hong Kong say Phuket has one of the biggest number of virus cases in Thailand. The country is already in a state of emergency. And leave it to the art world's most notorious prankster to breathe some life into an otherwise devastated market. An online sale of 25 prints by the street artist Banksy totaled $1.38 million. That was above $70,000 more than the highest estimate, according to Sotheby's. The auction was led by two versions of Girl with Balloon, based on the painting that famously self-destructed at an auction in 2018. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Naira.
Leanne, thank you so much. I was saying earlier, I guess people do need nice things to put on their walls if they're spending a lot of time at home.
True, because, we did see that people had been stockpiling paint and shrubs as they tackle their garden and walls in the house during quarantine or lockdown, which is quite an interesting thought. Would you paint your walls in the lockdown? I'm not sure I would.
To be honest, at the best of times, I'm not really the decorating type, and that hasn't changed even with lockdown. Leanne Gerrans with the World News. Thank you so much. Let's get back to the markets, though, and Peter Dixon, global equities economist at Commerzbank, joins myself and Roger down the line now. Peter, great to have you with us after the stunning week we saw for the Dow last week, best week since 1938, and the best week for the S&P 500 since the financial crisis. The question keeps being asked over and over whether we found a bottom, but I suppose it's only in the rearview mirror that you know whether something is a dead cat bounce or not. It's difficult to make comparisons with previous crises, given how unprecedented the coronavirus crisis and the fallout on global economies is. But during 2008, during the dot-com bubble, and during the 1973 oil crisis, we saw US equities fall something closer to around 50%. Right now, the S&P 500 is down about 25% from its peak. Is it worth making the comparison and saying that before we find a bottom, we need to at least see the kind of destruction in equity markets that we saw during 2008?
I'm not sure that's necessarily the case. I mean, we're faced with, as you said, a very different situation. We're looking at the moment at a market which is basically trying to, find an equilibrium, if you like, on the basis of absolutely no information whatsoever. Now, there is a very strong case which suggests that the markets could go lower, depending on how bad the March numbers turn out to be, and indeed how bad the second quarter turns out to be for the US economy and indeed the global economy. So, I certainly would advise a huge amount of caution with regards to where we go now. I certainly don't treat the rebound that we saw over the past week with a great deal of confidence. Whether or not we go down the full 50%, I'm less sure, but I think in these crazy times I wouldn't rule anything out.
So, Peter, I mean, what you're saying in a way is that with the lack of information, and there is, as you say, solid information very hard to come by, at least looking in the near-term future, is it really a matter almost of emotion that's driving the markets at the moment? Because you can imagine there would be a lot of emotion from the sheer number of deaths that are predicted.
Yes, I mean, I think that's what makes this crisis different to anything we've previously experienced. It is genuinely a matter of life and death. And I think that has had a major impact upon the way in which everybody thinks about the impending economic downturn, and I guess equity investors are no exception. Yes, there's a lot of emotion involved, but I think generally speaking, investors are a pretty rational bunch. They are going to be looking at the expected downturn in the economy and the expected downturn in earnings numbers. When they're making their selling decisions, and when they don't see any indication of where the bottom is, they'll continue to keep on selling. Now, some people might say that's emotional, some people might say that's a rational thing to do given the information that we have at our disposal.
Peter, if and when we do start to see an inflection in cases worldwide and the market starts to gain confidence that at least in terms of a health crisis, this is under control, will we see a powerful rebound in equities, or will the market quickly look through that and start to be concerned about the economic fallout, even with the stimulus that's been put forward? Because a lot of people have pointed out it's not really stimulus, it's simply damage limitation.
Yeah, right. I think that's the hundreds of trillions of dollar question, really, isn't it? I mean, obviously we don't know, but for what it's worth, my sense is that over the course of the next few weeks and months, markets will be looking at the economic situation to try and get a sense of where the economy is likely to be. And I think as a consequence, they're not going to take any rash decisions about piling back into equities. I think we might see a bit of a rally, but I think it'll be an awful long time before we retrace the tops that we saw just a month or so ago.
Yeah, because, I mean, the cost of all the stimulus that we've been hearing about will have to be borne at some point. And we already heard suggestions this morning that maybe this is a point where the banks start coming in and being the good boys of this in a way they weren't seen to be the good boys back in 2008. But the debt issue is pretty dramatic, isn't it?
Oh, absolutely. I mean, there's no doubt that what we're looking at now is almost wartime levels of debt. And we're going to have to think very differently about how we deal with it, because it may well be that in an environment where debt levels are extraordinarily high, central banks are going to be there trying their very best to try and keep interest rates down in order to limit debt servicing costs. In a sense, this kind of financial repression may well be a rerun of what we saw in the United States following World War II. It's going to be a very different world, I think, for the foreseeable future. We're going to have to learn to live with higher debt, but as you rightly point out, there isn't really any alternative. We're going to have to live with it because it's necessary to incur that debt.
The dollar's a little bit firmer today, Peter, after the worst week since 1985 for dollar index last week. Goldman is saying that a disorderly dollar surge might spark some intervention. Would dollar strength lead to equity weakness, or would it only be disorderly dollar strength that leads to equity weakness?
I'm not sure I'd want to even go that far. I mean, dollar strength, equity weakness, I don't think it necessarily follows. I think the problem that you'd have with dollar strength is you would have significant pressure on emerging markets, and they would certainly see extraordinary circumstances. Whether it's disorderly or even an orderly rally, the pressure on emerging markets will intensify. And I think investors in large parts of the world are going to have to be rethinking their geographical portfolio allocation to determine whether there is still value in emerging markets, or whether they're going to be trading a lot closer to home in the future.
Peter, thank you so much. Peter Dixon, there, global equities economist at Commerzbank, giving us a sense of where perhaps this market is going and the longer-term prospects as a result economically. Naira, how are the markets looking out there? I mean, a lot of red on the screen in Europe particularly.
Yeah, absolutely. So a second day of declines is what we're seeing for the Stock 600, down 2.4% on Europe's equity benchmark right now. We saw some optimism come through in US futures overnight in the Asian session, but Dow futures down more than 1%. S&P and Nasdaq futures both lower by at least 0.7%. Of course, we're looking ahead to potential portfolio rebalancing. The 10-year Treasury yield down 3.5 basis points to a 64 handle. This is Bloomberg.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
External pressure is going to be an opportunity for reform in China. I think liquidity more generally across financial markets is an issue and a concern.
The Spanish banks in particular are in a much better place than they were 5 years ago.
It wouldn't be great to have a drawn-out trade conflict with the US or indeed with anybody else. But I've never been one to prophesy where sterling will be, and you're a madman if you think you can.
Bloomberg Daybreak Europe on Bloomberg Radio.
Good morning. Good morning. Anna? Is Anna? Maybe Anna's not quite there yet. But I'm here, Matt Miller, live from Berlin. It's been 3 weeks since we've joined forces on this program together because of daylight savings time or because of the lack thereof here in Germany, here in Europe. We took a few extra weeks to hit it than the U.S. did. I don't know why we're still doing it, to be honest. I thought the EU had voted not to do that anymore. In any case, we are still doing it. So now we've lost an hour. I wake up in the middle of the night again, and it's still light out when I go to bed. Let's take a look at what's going on in terms of the markets. We are looking at drops on European equity indexes down across the board now, even after we saw futures rise this morning in both the U.S. and in Europe. And then we saw European equity indexes get out of the gate positive in the cash trade, but then fall after just 10 minutes, not even, of trading. Now we see the FTSE down 2.5%, the CAC down 3%, and the DAX down 1.5%. So drops across the board. In terms of other asset prices, so much fascinating stuff to talk about. Brent crude trading for $22.85 a barrel. So Brent crude is down 8.3%. I had to squint for a second. I had to pull away from the microphone and squint to see. Unbelievable. And we had NYMEX WTI drop down below $20 a barrel. So oil is in a super slump. 17-year low, I think I heard someone say, for Brent crude earlier today. As far as U.S. Treasuries, they're yielding 0.6368%. Bunds are negative 54 basis points, and gilts are about 29 basis points, but just dropping like a rock. When you look at the chart for gilts, it's pretty amazing, the drop in yields today. The pound right now trading at 123.49. Strong week last week for the pound, but of course it had fallen to such a low level, and as we know, Boris Johnson has tested positive for the coronavirus. The euro trading at 110.74, and you can buy 108 yen for your dollar right now. So there's a look at some of your data this morning. We get them to you, those data checks, every 15 minutes. Let's get right now to our top story. Of course, the number of global coronavirus cases is over 720,000, according to the latest tally out of Johns Hopkins University, and we all know that not everyone has been tested, so that number is, of course, expected to be much larger, the number of cases, if you had the ability to test everybody. More than 34,000 people have died from the coronavirus since the start, that we know of, and more than 150,000 have recovered. Meanwhile, U.S. President Donald Trump has extended the national warning for Americans to distance themselves from one another until April 30th, now through the end of April. Remember when he wanted to get business back to start it up again by Easter? That's not going to happen. The White House expects U.S. deaths from the outbreak to peak in about 2 weeks. For more on the pandemic, I'm joined by Bloomberg's Maria Tadeo out of Brussels and our senior international editor, Jody Schneider, out of Hong Kong. Jody, I'll start with you first on the numbers. I heard Donald Trump say if we only get 100,000 deaths in the U.S., that'll be a good case, and worst case could be 2.2 million.
Yeah, and that's a big about face for Donald Trump, who had been until recently trying to downplay concerns, saying that the U.S. was on top of this and that people could be packing the churches by Easter Sunday, which is just in 2 weeks on April 12th. this about-face really came after his top medical advisors, particularly Anthony Fauci, gave him some new projections, fairly alarming new projections, that millions of Americans could be infected. And Dr. Fauci also said that as many as 200,000 Americans could die if these efforts to try to stop the spread of the virus were not successful. So this apparently, and with some lobbying by Dr. Fauci and other top U.S. medical officials to Donald Trump, they really made him change his mind or change his tone on this, and now seems to be taking the social distancing measures and the kind of closure of large parts of the country quite seriously.
And of course, there's a massive effort to bridge the economy from, through the crisis. Here in Europe, Maria, it's not quite as massive as some country leaders would like. And you shared with us, with all the Bloomberg reporters, a little bit earlier, an article about Matteo Renzi saying, it's tough to say, but at this point, the economy is so weak, we might have to just start opening things up again, even if people are going to die.
Yes, and he's taking, as you can imagine, a lot of heat for that, for saying the reality is there's people who don't have a full-time job. There's people who work in hotels. There's people who work in restaurants. There's people who get paid on a weekly basis. And at this point, you're looking at an economy that's been shut for almost a month now, and people who may actually struggle to pay things like a phone bill. So ultimately, there is going to be a tension that will come from how quickly will we go back and what is the health perspective on this. That is not to say, however, that the Italian government is thinking of changing any of their strategy at all. In fact, the Italian government believes that it's only now, 3 weeks after the lockdown was put in place, that the measures are finally paying off. The numbers, when you look at Italy, are still very high. You look at the number of cases, you look at the number of deaths, it's still 700, pretty much on a daily basis, but they have declined for 2 days straight now, both deaths and cases. So that is giving the government some momentum to say, yes, this is bad for the economy. Yes, this is going to hurt. There's no question we're in for a very deep recession, but we have to do it because we need to do it to keep everyone safe. But of course, Matt, as you know very well, that is turning into big political tension, not just within Italy, but also Italy and other countries like the Netherlands and Germany.
Yeah, well, exactly. I mean, if they had the money to give people relief for those phone bills, they wouldn't have to choose lives versus livelihoods. And I'd say, Maria, that every economist that we talk to on Bloomberg TV says that some sort of shared debt would be helpful, if not necessary. We just heard Luis de Guindos, the VP of the ECB, come out and say he supports what are now being called Corona bonds. And of course, last week, many world leaders came out for it. But the German government is so dead set against it. Is this statement by Renzi, in one sense, kind of him fighting for Corona bonds?
Look, it could be. I think, Matt, what we need to realize also, and sometimes I think we all struggle, is that there are people who actually do live on a weekly basis with no actual money, and this month, at the end of it, they're going to have to pay for a mortgage, they're going to have to pay for a phone, and they're going to have to pay for rent and grocery shopping. So not everyone is in a situation where they can actually stay at home and deal with life. It's not life as usual. This crisis is huge. It's really unexpected. And you could also take the Italian perspective on this, which is to say, in fact, there's not really a lot we could have done because we couldn't have predicted this was actually going to happen. Now, you could argue perhaps the Italians didn't manage this well, that they should have gone into a lockdown way easier, that they should have earlier, I should say, or they should have done things differently. But either way, this is going to end up in a lockdown. So how do you deal with this? It's difficult. What the Italians argue is that means we need more cash. What the Dutch would say is, well, if you had actually saved and done reforms back in the day, you would have a bigger margin now, which is also understandable. But you could argue that this is a very touchy subject for many countries. This is something very emotional.
Absolutely. The question is, can the European stability mechanism provide the cash they need to get through this crisis, or is it going to have to be something else? Jody, United States of America, the federal system that they have, it's also got its issues, right? There are also problems going on in the U.S. I noticed that Trump was talking about the possibility of quarantining New York, New Jersey, and Connecticut because the Florida governor didn't want New Yorkers streaming down to the southern state. How does it look now?
Yeah, there is a lot of tension and has been between the federal and then state and local governments in this. The mayors and the governors, they've tried to work with the federal government, but at the end of the day, when they don't have what they need, they appeal based on their populations. And it has also come to the point, as you noted, that certain states are being viewed as the problem now, and they don't want them traveling to other states, although there's a large constitutionality problem if you try to close your state borders. President Trump had seemed to indicate that he didn't want New Yorkers going into other states. He wanted to close the borders in the New York region, which is New York, New Jersey, and Connecticut. Then he came up with this other idea of having there be a travel advisory for people from those regions going to other regions, telling them to stay home, that they shouldn't be going other places rather than trying to close state borders. So that seems to be more enforceable and probably more constitutional as well.
But the bottom line is this pandemic is prompting conflicts between states in the U.S. as well as states here in the European Union. Jody Schneider out of Hong Kong, thanks very much. Maria Tadeo in Brussels covering this unfolding pandemic hour by hour. Let's get over now to Leanne Guerin. She's got your first word news. Leanne?
Matt, good morning. Hospitals in Italy and Spain are overwhelmed by coronavirus cases as a global death toll exceeds 34,000. Keeping Europe focused on further restricting people's movements. But on Sunday, Italy reported a second straight daily decline in the number of deaths from coronavirus. Bloomberg's Alessandro Speciali has more.
This offers hope that the stern measures the government has implemented over the last 3 weeks to combat the outbreak may be finally bearing fruit. Fatalities from the disease fell to 756 on Sunday. In Rome, Alessandro Speciale, Bloomberg Daybreak Europe.
Elsewhere, Spain experienced its deadliest day as deaths from the coronavirus rose by the most since the pandemic began. Bloomberg's Charlie Deverick says it's prompted the government to implement even tighter restrictions.
There were 838 deaths in 24 hours, pushing the total to more than 6,500, the government said on Sunday. It has ordered all non-essential workers to stay at home until Easter as it strives to contain the virus. There was a glimpse of light. The pace of increase in fatalities slowed for a fourth day. In Madrid, this is Charlie Devericks for Bloomberg Daybreak Europe.
Now, New Zealand is less than a week into a nationwide lockdown, and already tempers are flaring as some people flout the rules. Bloomberg's Tracy Withers reports.
A police website set up for complaints about people or businesses failing to abide by the new regime crashed when it was overwhelmed by more than 4,000 notifications within hours. Local media reports groups of people failing to comply by playing rugby in local parks or heading out surfing. Police have made 3 arrests for persistent non-compliance in Wellington. Tracy Withers, Bloomberg Daybreak Europe.
And the biggest holiday location in Thailand is going into lockdown today with all transport links banned except by air. Phuket will be under tighter restrictions for at least a month, with only trucks and ships carrying essential goods and services exempt from that order. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Hello, I'm here to tell you that age really does bring wisdom, and you may still have plenty to contribute. At Eisner-Amper, we're successful at helping business owners and entrepreneurs assess and plan for the future, as well as maximize where you are in the present. If you're curious about how to plan for both your professional and personal future, come and talk to us. I'm Lisa Stewart, principal in charge of the Center for Family Business Excellence, and I'd love to help you to find the right path forward. You can find us at eisneramper.com/family.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Influential conversations from Bloomberg Television. Here's Taylor Riggs.
Our next guest is that global GDP could be reduced by about 25% or more because of the virus. Joining us now is Bruderman Asset Management Chief Market Strategist Oliver Persch. If we see potentially deaths peaking in about 2 weeks, we've often heard that equity markets can't bottom out until you get a flattening of that health curve. Does that give you any sense of confidence now that the markets within the next 2 weeks could start to find a bottom here?
I think the issue that we're going to have is that certain cities like New York, where the outbreak is already pretty broad and pervasive, are going to peak much earlier than some of the other cities that are now just getting going, whether that's New Orleans or Chicago. So you're going to have flare-ups in different parts of the country at different times, and that's what's going to make this very challenging for equity markets. I do think, though, that the one place to look at and make sure to get some sort of semblance is how credit markets are behaving. And this past week was very good for credit markets. There's a lot of stabilization that happens. And it's a clear sign that the actions that the Federal Reserve and other central banks around the world are taking are having their desired effect. So there is some reason for optimism here.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
Good morning from London. I'm Sandra Kilhoff with this Bloomberg Business Flash. Now, markets are risk-off again this morning. This as the global death toll from the coronavirus now exceeds 34,000. We are seeing the FTSE down 1.7% here in London. The Stock 600 down 1.5%. The DAX sliding about 1% in Frankfurt. U.S. equity futures also pointing lower following a down day in Asian trading. Now, that risk-off sentiment is boosting the dollar this morning, snapping 4 days of declines, now up 0.5% according to the Bloomberg Dollar Spot Index. The yen is holding at 107.9, but we are seeing sterling significantly lower, currently down 0.8% at 123. This after Fitch downgraded the UK sovereign rating on Friday. A similar rating cut to the Mexican growth is also affecting the Mexican peso, currently down 1.4% at the moment. We're also seeing the offshore yuan, for instance, lower this morning, down 0.3%. Not really listening to the fact that the PBOC has lowered its short-term funding rate, so that easing not having any effect there on the Chinese currency. If we take a look at bond markets, 10-year Treasury yields sliding 4 basis points to 64 basis points. 10-year bund yields now down 7 basis points at negative 55. 10-year gilt yields down to 28 basis points at the moment. So quite some big moves there in the bond markets today. In oil, we did see WTI slide below $20 a barrel earlier, but now trading just above it, down 5.4% at the moment. That's a Bloomberg Business Flash. Now here's Leanne Garens with more on what's going on around the world.
Sandra, thank you very much. Here in the UK, some 20,000 former NHS staff have returned to work to help the fight against coronavirus. That's according to Prime Minister Boris Johnson. Johnson, who is self-isolating after testing positive for coronavirus, has said the country would get through the crisis together. Fatalities here in the UK increased to 1,228 on Sunday, with 19,522 confirmed cases. Moscow's mayor has ordered his city's 12.7 million residents to stay home starting from today, warning that the spread of coronavirus in the city has entered a new phase. The measures in the capital are the strictest yet imposed in a major Russian city. Confirmed infections in Moscow jumped overnight to 1,014 and make up 2/3 of the country's total. And China has reported a drop in new coronavirus cases for a fourth day in a row. There were 31 new cases reported on Monday, of which 30 were imported. According to the National Health Commission, this is down from 45 from the previous day. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It's 9:20 in London, 10:20 in Berlin. Time to check in with Bloomberg Opinion. We're joined by opinion columnist Andreas Kluth, who's writing about the coronavirus spread in Europe from his home. And how's it going, Andreas?
It's going pretty well for me. In fact, quite good. I mean, the privilege of an opinion columnist is you can work from anywhere. You don't have to be in the office or in meetings. So I can't complain.
I mean, I could work from anywhere, too. I've got a studio set up at my house, but I need to see people. I need to bounce things off of others, get feedback. I think I'm a little bit of an extrovert. So for me, this is like very difficult.
And for me, it's a lot easier because I'm a moderate introvert on the spectrum. And, you know, this is, a column I just did, that for introverts, this may not be such a bad time. In fact, if you look at previous pandemics or previous outbreaks of disease, epidemics, a lot of times for introverts, there was a form of liberation when they were very creative and did great things. I'll just mention one famous example. I mean, Isaac Newton, when he was at Cambridge University, there was an outbreak of plague, and they had to send everyone home, just the way where universities and schools are closing now. And he spent a year at his family estate in the countryside, and he he discovered gravity, optics, and calculus, basically. And historians call that the miracle year. In fact, it was a quarantine, so it's not bad for everyone. And I'm sorry that for extroverts like you, it must of course be hell right now.
It's tough. You know, the worst part about it is I come to my best decisions by saying things before thinking and getting them wrong, and then I realize later, oh, that was stupid. In any case, I thought it was a great column, so I wanted to bring it up.
Thank you.
One of the more serious debates happening right now that I wanted to get your take on, Andreas, is whether or not we'll see or we need to see shared debt in the European Union. As you know, the Germans are steadfastly against it, but they're coming up against a huge chorus of voices from 9 European Union countries and the ECB. What do you think?
I think, first of all, this is an old debate. If you recall, we used to call it Euro bonds. Now we call it Corona bonds. Those are the things that are allegedly in the pipeline. And what I'd like to sort of the way I come at it is the wrong way to do it is Euro bonds. The right way to do it would be what I'd call Hamilton bonds. Because if you remember, when the United States was young, just after the Revolutionary War, Alexander Hamilton said, okay, I'll assume the debt of the states to help them, but we'll all borrow together up top at the federal level. And there'll be a tax revenues at that federal level and treasury bonds and some form of legislature. And what I hope that the Europeans figure out, because the Euro bonds idea is the wrong way, if you from the Euro crisis that was around, that would be Italy issues a bonds and everyone guarantees it. Imagine if someone suggested Texas issues bonds and California, guarantees it. That doesn't fly in any federal system. So we have to understand, so the South, the Italians and French have to get their mind around that and not propose something, insane. But the North then has to be flexible and understand, at least the Eurozone, maybe the EU, we do have to issue some kind of equivalent to treasury bonds in the long term. But we'll need tax revenues to pay for it by the EU and the legislature.
It's a great comparison. For those non-Americans listening, Texans and Californians are in a lot of ways culturally, certainly diametrically opposed, in the same way that the Germans and the Italians are, although I'm sure there's still a lot of love out there. Andreas, thanks very much. Andreas Kluth from Bloomberg Opinion. You can check out his work and the work of his colleagues by typing OPIN GO on the Bloomberg terminal.
With the Bloomberg Business of Sports Report, I'm Michael Barr. Major League Baseball and its jersey manufacturer are teaming up to help protect Americans against the spread of the coronavirus. MLB and Fanatics are partnering to manufacture hospital gowns and protective masks with the same fabric used to produce jerseys to bolster the supply needed to fight COVID-19. Fanatics, based out of Easton, Pennsylvania, is converting its manufacturing center to a production center for the personal protective gear hospital workers desperately need as the virus spreads. The league